Hi everyone. I hope that you can hear me. Can someone just confirm once? Anyone from the management team?
Yes, we can hear you, Ayush.
Yes. Okay, thanks. So, hello, I'm Ayush Kashyap. I'm in my third year as an undergraduate in the Computer Science Department at IIT Bhubaneswar and obviously a member of the Society of Finance, Economics and Business. I welcome you all, especially our honorable guest as well as the whole audience on behalf of our FEBS family. Now, there has already been a lot of buzz in our college about today's session and our collaboration with India's biggest trading platform, Zerodha, that offers you an exclusive session on the subject of technical analysis of the stock market. Now, given the current craze for stock markets and cryptocurrencies, many young people aspire to be the next Warren Buffett, or you may take such examples. But if you start your journey without any technical understanding, that is purely a gamble. And we are not here to encourage you for that. So that's why we are here. Now, keeping this session had so many reasons and so many benefits that you would surely realize. But one thing I can surely assure you that after this masterclass, you will be able to make informed decisions, at least in the direction of investing in stocks and all. So for this very purpose, I'll just ask once if someone from admin team can confirm. Are we good to go? Like, I hope most of us have already joined. Chitaj, can we start now?
Yes, sure. We can
Yeah.
start.
So let's right away welcome our today's guest, the head of education services at Zerodha, and the guy behind the extremely famous Zerodha Varsity, which is a vast and in-depth collection of stock market and financial teachings that has educated thousands of investors throughout India. None other than Mr. Karthik Rangappa. So over to you, sir. And thanks a lot for accepting our proposal.
Sir, if you could turn on your mic, sir.
Yeah, hi guys. Hi Ayush. Thanks for the introduction. Just wanted to confirm that if I'm audible and if you guys can see me.
Yes, sir. There are no technical issues till now.
Awesome. Uh, Thanks so much. It's a pleasure to be here and spending this evening with all of you, trying to share a thing or two that I know about stock markets. Before I proceed, I do assume that all of you are familiar with Zerodha. For those of you who are not, a quick introduction. We are a stockbroking company based in Bangalore. We are about 10 years old, more than 10, 11 years old. And we are members across the National Stock Exchange, Bombay Stock Exchange, Multi Commodity Exchange. We are also a depository participant with CDSL, right? By virtue of active traders, we are the largest stockbrokers in the country, right? With that aside, a quick introduction about me. My name is Karthik Rangappa. I head the education initiative at Zerodha. One of the things that we do apart from whatever we do as a stockbroker is also taken a lot of efforts to educate um, Indians interested in knowing more about the capital markets. So that initiative is something that I'm responsible for. It's called Zerodha Varsity. I'm guessing most of you here may be familiar with that. If not, please look us up online and you'll get access to a lot of content related to markets. Right. So I was with those two introductions. Let me proceed with the topic for the day. Ayush, how much time do we have for today? It's a 1 hour session, is it?
Yes, sir. We have one hour.
Okay, cool. So, I think one of your colleagues, Sachin, if I'm not wrong, he had mailed saying that a lot of people may be new to charts, so he requested me to start from the basics just to ensure that everybody is on the same page. So what I do is um, I'll give a brief overview of what technical analysis is and how charts can be used for your day-to-day trading and investing activities. But that said, if you have any questions related to the topic that we're discussing today, or if you have any questions related to stock markets in general, Do feel free to interrupt and ask me your questions and queries. I'll be happy to answer that for you. Right? Is that okay?
Yes, sir, that's perfectly fine.
Yes, sir.
Okay,
Yes.
cool. Is there a way I can share my screen? Open share tray, right? This one now. Okay.
Sir, there will be an option like beside mic, sir. Camera, mic, and then there will be
Well,
option to
I'm
share the
not
screen.
familiar with Microsoft Meet. We usually end up using Google Meet. So I'm a little struggling. So this open share tray, right?
Sir, did you click on share?
Yeah, it says share tray, but I'm unable to. All right. Is my screen visible?
Yes, sir. Now it is visible, sir.
Can you see the black screen?
Yes, sir. We can see that too.
All right. So let me. Can you see that?
Yes, sir.
Yeah, you can see what I've written, right? So yeah, so I'll be using this little tablet that I've got. Hopefully, I won't bore you in terms of making this look like your regular classroom session. So please bear with me on that. But I find this pretty convenient to do workshops because I can communicate better with the audience. So anyway, so that apart, let's let me start. Right? Okay. All right. Can someone tell me what time the stock markets open in India?
9 a.m.
9, right? And what time does it? 9 a.m. is it?
Yes, sir.
Yes, sir.
Okay. Fine. Let's keep that question aside. Uh, can you tell me what? Can someone tell me what is the purpose of a chart? What is the purpose of a chart? I mean, we are all here to learn a thing or two about technical analysis, right? And somewhere you guys must be aware that technical analysis means looking at the charts. So what is it that we expect from the chart? Can one of you just unmute yourself and help me understand what you think about it?
We can get the price movement.
Okay.
The charts
So let's
help
say,
us to identify the trends of the
okay, so someone said
index.
price. Please don't mind my handwriting. It's really horrible, but what I've written is price and trend. Any other thoughts?
For observing our progress.
Observing progress, sort of trend, right? So you want to see the trend, whether it's
What's that
moving
past
upward.
history?
Okay, history. Anything else?
To know the number of shares sold.
Sorry,
To
that was
the number of shares bought or sold.
okay. So that's called volume. All right. So I've got four things here: price, trend, history, volume. That pretty much covers all the aspects of what we do in technical analysis, right? Now let's stick to the first point. Someone said price, right? So let me give you. Let's assume a stock. Let's say XYZ stock. So day one, it's trading at 101. Day two, it's trading at 103. Day three, it's trading at 99. Day four, it's trading at let's say 100. And day five, let's say um, 10107. Okay. Now, if I were to plot a chart for this, so the start, let's say we are starting from 100. The first price is 101, then 103, 99, 100, 107, right? So it would be something like this. So with this axis representing price and this axis representing day time, right? So this what we are looking at is a very simple price chart. This is also called a line chart, right? Now, what do you guys think about this? Now, do you think we can do technical analysis on this? Let me elaborate a bit. Now, I initially started off by asking what time the stock market's open, right? So what time does it open?
So the trading starts at 9:15 a.m.
9.
but it pre-opens at 9 o'clock.
Right? So we have something called as a pre-open session between 9 to 9:15, but the actual stock markets open at 9:15 a.m. Right? And what time does the stock market close?
3:30.
3:30.
3:30 p.m. How many hours is this? 6 hours, 45 minutes of active trading, right? Now, what we looked at here is one aspect, but in reality, so let's say this is day one, right? So this is this entire thing, what we are looking at from 9:15 to 3:30 p.m. is day one. And in reality, right? In reality, between 9:15 to 3:30 p.m., your stock price can move anywhere. Let's say this is for easy understanding. Let's say this is 100 as a reference price, right? In reality, between 9:15 to 3:30 p.m., the stock can trade anywhere, right? So let's say there was one point here at 99 that a trade occurred at 9:15. Then at the immediately next minute there was a trade at 101 point, let's say 100.5. Then there was another trade here, there was another trade here, there was another trade here, right? In reality, during this 6.5 hours, 6 hours 45 minutes, there will be a trade at multiple price points. What we looked at here was just the closing price, right? We just looked at one aspect amongst all of this. We just picked one price and we put it down here. But in reality, within a day, there are multiple thousands and thousands and thousands of prices at which a stock will trade, right? Now, obviously, it is practically impossible to track all these prices. So what technical analysts do is, if I have to summarize the price action for day one, now if you come to me and ask me, Karthik, how is the trading for the day? Now, I can't obviously tell you that there were 2000 price points at which the stock traded today, and this is the list of all the price points. Now that would be extremely stupid, right? Now, in order to summarize the trading action for the day, what technical analysts do is they pick four key price points, right? They pick the opening price. Okay, so they pick the opening price. They pick the lowest price at which so this is the open, right? So this is open. They pick the lowest price during which the lowest price the stock has traded during the day. Let's say this was the lowest price, or maybe this was the lowest price. So this is the low. They pick the highest price for the day. Let's say the highest price, let's say this was the high. And then they pick the closing price for the day. Let's say this was the closing price. All these four price points, that is the open, high, low, close, is called the OHLC price, OHLC, right? Open, high, low, close. Now, as a technical analyst, if you have to summarize the price points for the day, you will have to look at the OHLC of the day. If you look at the OHLC for the day, you will get to know, okay, the stock opened at around 99, traded at the most around 107. The lowest, the low point was around 98 or whatever, and the close price was around 105. So with that, you will get a range for the day, right? Now, the problem here is, although this is a chart, although this is a chart, it gives me a, a single perspective on the price. It tells me, okay, today, day one, the close was 101, which means I'm only considering the close price here. I'm ignoring the other three price points, right? So on day two, it was 103, day three, it was 99. So on each day, I'm ignoring three other price points, which are equally important. Now, therefore, in order to capture all the four price points of a day, there is a charting technique called the candlestick charting technique, where all the price points can be represented in a single chart, in a single candle, right? Let's say I'll just put down arbitrary open, high, low, close here. Open of the day is, let's say, 103. High is 107. Low is 99. Close is 105. Now, these are the four price points of the day which I need to represent. Now, if I have to represent this in a form of a candle, then this is the structure of a candle. I'm sure you would have seen these charts. I'm sure you would have seen this candlestick in multiple stock charts. Now, this is, let's put this, let's fill this with red. This is called a green chart because this is the open. The low of the candle represents the open, which is 103. The high of the candle represents the highest price, which is 107. The low of the candle represents the low price, which is 99. The top part of the candle represents the close price, which is 105, right? So you can look at any candlestick, any stock chart, and you'll realize that you'll find red and green candles. Basically, these red and green candles represents the open, high, low, close of the day. Let me take a small pause at this stage, and if you guys have any questions for me, I'll be happy to answer. Anyone has any questions? Can you guys see this, the website that I've opened? It's called Charting. It's one of those nice places to look at charts.
Yes, sir, we can see that.
Right, so let me pick, are you guys familiar with candlesticks?
Yes, sir. Yes, sir.
You all are familiar, right? Okay, so what I've got here is the chart of Nifty, right? So let me get rid of these moving averages. Right, so what you see here are all candles, right? So you've got a white candle here. White candle here represents a bullish candle, which is very similar to the candle that I just described here. And the red candle represents a bearish candle. A bearish candle is when the price has gone down for the day. Now, in this example, the stock opened at 103. it moved up 2 rupees up. So this is a bullish candle. But let's say you had, so in a bullish candle, the most important thing to note is the low of the candle is the opening price. Sorry, the base of the candle is the opening price. The top of the candle is the close price, right? Now, if we were to do a bearish candle, right? Let's say open was 105, high was 108, low was let's say 99, lows was 100, right? So the same candle, the price points changes, right? So in this case, the top of the candle becomes the open. Guys, if you have any questions, please ask. The low of the the base of the candle becomes the close. This still remains the high, and this still remains the low. Right now, this is 105, this is 108, this is 100, this is 99, and the color of the candle will be red. Right? So this is a bearish candle. The only difference is the interchange of close and close points. So open is here and close is here. High and low remains the same. Any questions?
Excuse me, sir.
Yeah.
Sir, is there any limit on how high a stock can go or low within a day?
Yes, there are certain limits. Just give me a second. So these are called circuit limits, right? Now each stock has based on a preset criteria. Each stock has a certain limit as to how much it can move per day. Now these criteria is decided by the exchange on a regular basis. Now, if a stock is, if it's a small cap company and if it is susceptible to scams and pump and dump schemes, then the exchanges will put a 5% circuit, for example. Now, if it's a reasonably large company with good active trading going on in that stock, then maybe 10 or 20%, right? But maximum is 20%. That's when the stock will hit a circuit, 20% up or 20% down. However, for stocks which have derivative contracts, I don't know if you guys are familiar with futures and options, then there are no circuit limits for those stocks. And the reason is fairly simple. If 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 there is a derivative contract, then there are options to hedge away your risk. You can be long on the stock in the spot and short on the futures, right? So you are hedging away your risk. So therefore, your downside is protected. So that's the logic, and there are no circuit limits there. But there are price freeze points where the exchanges will freeze trading activity to cool off the frenzy in the market, and then they open it after some time again. So, and this happened in a couple of stocks recently, Yes Bank and PC Jewelers, and they were cracking, right? All these things were at play. Any other questions?
Sir, does each candle represent one day of the one trading day, like the prices of one trading day, or what is?
Yeah, so see, the thing is, this is how a candle looks, right? So this is how a candle looks. Now, what I've done is I've summarized the entire day's action into one candle. Now, now you can summarize. Let's say I don't want to summarize the entire day. You're only interested in, let's say what happens in 5 minutes. So what will happen is, hopefully this should. So market opens at 9:15 a.m. Let's say this is So what we are looking at is a 5-minute window. Okay, let me get rid of this. Okay. What we are looking at here is the 5-minute window, right? Now, within this 5 minutes also, stock can trade anywhere. Within this 5 minutes, let's say this is the low point, this is the high point, this is where it opened, this is where it closed. Now, just this can be, so this is, let's say, 75. Let's say the stock opened at 75, made a low of 74, made a high of 76, closed at 75.5, right? Now, compared to open, the stock price has gone up, so it's a bullish candle. So the candle will look like this. So open at 75, high of 76, low of 74, close of 75.5, and this will be a bullish candle, right? So this represents only that 5 minutes between 9:15 to 9:20. Now imagine this is 9:25. So you keep on breaking this into 5 minutes interval, and till 3:30 p.m. you will get several of those 5-minute candles, right? Each candle represents a particular 5-minute window within the market hour. Now, traders use this either 5-minute. I'm using 5 minutes here. People use 10 minutes, 15 minutes, 30 minutes, whatever time frame you want, you can choose in your charting window and make charts out of it, and analyze that and set up trades, right? So any questions on this?
So the open price will be the if we are analyzing for 920 to 925, the open price will be for 920,
Yeah,
not.
so this
Okay.
candle here for between 920 to 925 will represent the opening price at 920, the closing price at 925, and the high and low between these two timestamps,
Got it. Yeah.
right? So what will happen is um, if you plot this continuously, you'll get a series of charts which will probably look like this, right? Even this is a candle. Uh, so that's how your chart for the day will look, right? With obviously green and sorry, that's also green. This is red. Things like that, right? So you get the point. So you will for the day, if again this is 9:15, 3:30, you'll get a series of these charts. Right, let me see if charting has an end of day. So can you look at this? What I had selected was the time frame as daily, but I can make this a 15-minute chart. What you see here as of yesterday, this was the opening price. So this was from 9 to 9:15. This was from 9:15 to 9:30, right? 9:30 to 9:45. So different charts till 3:30 p.m. If I don't want end of the day, then this is my daily chart. This was the candle for yesterday. Any question? Now that leads us to the time frame, right? Time frames. What are the different time frames people use? So the most popular time frames are, if you are a positional trader, then you can look at daily charts. If you are a intraday trader, then you have 5 minutes, 10 minutes, 15, and even 30 minutes. Based on your trading frequency, you can choose one of these time frames and do your analysis to trade. But when I was actively trading, now I don't trade because of regulations. But when I was actively trading, I would still use the end of the day chart or the daily chart to do my intraday trade as well. So, and that's also quite effective. Any questions?
Sir, does the dimensions of candle depends upon the prices?
Sorry?
Does the dimension of candle
Yeah.
depends upon opening price, closing price?
Yeah, exactly. So let me give you an example. Let's say the open is 75, low is open, let's say high is 87. So it's a very large candle. Open, high, low is 70. Close is 85. So this would be a large candle compared to a candle, let's say this is 75, 77, low is 73, and close is 76. So this would be a tiny candle. So this is the range. You get the range here, right? So now obviously candles, the longer the candle directly implies that the range for the day is very large, which also means that a lot of trading activity has happened during the day. If the candle is short, then then it implies that not much trading activity for the day. Now let me talk about few special candles. There are times when open is equal to high, close is equal to low, right? So this candle will not have those upper and lower wicks, right? Earlier, remember when we discussed, this is how we represented a candle. Now I forgot to mention, this is called the real body of the candle. This is called the upper shadow. This is called the lower shadow, right? So this is how a typical candlestick looks like. This is the anatomy of a candle. But when such a situation pans out, where open is equal to high, right? Open is equal to when such a situation pans out in the market where close is equal to high, open is equal to low, then you'll just get a candle which looks like a rectangular piece, right? It has no upper shadow and lower shadow because the open is also equal to the low and the close is also equal to the high. So there are no upper and lower shadows. Now let's try and look at one of those candles in this chart. You look at this, the one that I'm pointing to, I don't know if it is very, this one, let me move the cursor away. There's a very small upper shadow, but look at the real body. Is this visible? I'm talking about this one.
Yes, sir.
Yeah, you can only see a small upper shadow, but there is no lower shadow to it, right? So this is a special, and because closes here, this is a bullish candle. Sorry, this is a bullish candle. Now my question to you is, why do you think this candle has no upper and lower shadows? I mean, if you think about I want you to think about what would have happened in the market such that the candle resulted in such a pattern.
Sir, both open and the low is same and close and high is same.
Correct. Why do you think that has happened?
Sir, that means the opening price is only the lowest price and the closest. That means it is like a decreasing or increasing graph.
So if you were to look at the intraday action for this, now remember this is the summary of the entire day. Now we've looked at the overall high level picture. Now let's dig deeper and see what actually transpired during the day so that we've got such that we've got this candle, right? So market opened at 9:15. So market opened at 9:15. It opened somewhere here, but the demand for the stock was so much that every dip, right? Every dip got bought, and there was so much buying interest in the stock that every dip was bought in such a way that the stock closed at the high point of the day. There was no moment within the day where the stock went down and it continued to slide. Every slide, every intraday slide was bought. That means this, and to an extent where at 3:30 the stock closed at the highest price. Now this represents extremely bullish, activity, and therefore we end up getting a candle like this. And in candlestick patterns, now obviously candlesticks, the way we analyze candlesticks is through patterns. We try to identify patterns. There are multiple patterns, in candlesticks, and this is one of the most popular pattern called the Marubozu. Have you guys heard of this?
Sir, is it necessary that at the time of closing the stock may hit the upper circuit
It's possible.
or it may get freeze?
It is possible. Right at the open, the stock may hit a circuit and it may freeze. You'll still end up getting a chart like this, right?
Okay.
So,
Thank you.
but see, this is actually the most important thing that I wanted to convey today. Now, candlesticks, the essence of candlesticks is basically to identify patterns and set up trades, right? Now, there are multiple hundreds and hundreds of patterns. I've tried to explain the top, 15, 20 of these in Varsity. Right. So if you go to technical analysis, you'll find multiple patterns here. I've tried to explain this. By the way, we also have a YouTube channel, so please look it up, where we've explained all these things. So, but what I'm trying to say is there are multiple patterns. Now, most of the people that I know end up spending a lot of time trying to memorize these patterns and uh, trying to look for these patterns in the stock market, right? Now, which is okay, but that's not really the way in which you should approach candlestick. Now, candlestick is at the end of the day a manifestation of the price and action and price and reaction to that price, which is also called the price action in the stock market, right? So you should be in a position to identify what is the price and the subsequent reaction to those prices that's happening in the market. Now, if you can go to a position where you can understand that, then there is no real need to identify these patterns and the need to map these patterns into what is happening in the market and setting up trades. So you should move to a stage where you look at the chart without even knowing the pattern. You should be able to analyze what is happening in terms of price and its reaction, right? So that's the essence. So, but anyway, before I get to that, let me quickly talk to you about 2, 3 different patterns and how to set up trades, and then I'll move to the price action part. So, any questions so far? Sure. So we spoke about Marubozu. Marubozu is a very, very powerful and interesting pattern. So we spoke about bullish Marubozu, which looks like this. Obviously, it has no upper and lower shadow. It's just a rectangular piece, and it is bullish. And I told you that the intraday chart for this would be something like this. Are you guys able to see this?
Yes, sir.
The intraday chart for this would be something like this, where the stock has been bought at every given point, and therefore it has closed at its highest price point of the day. The same thing if we had a chart like this. Imagine the stock opened here, and at every dip, the stock got sold. Every time the stock tried to move up, it got sold, right? So this is exactly opposite to that, right? So what if, to an extent where the stock kind of closed at its lowest point of the day. Now this will also lead to a Marubozu, and this will be extremely bearish in nature, right? And this is called the bearish Marubozu. Now these two are extremely important and quite powerful patterns. Now, whenever you spot this, you can set up a trade very easily, and we'll try and see some of those. Okay, so let's say you spot a bullish Marubozu in a chart, right? So what does bullish Marubozu represents? It represents extreme bullishness because every low point of the day was bought, right? Every low point of the day was bought to an extent where the stock closed at its highest price point. Now, if this has happened today, then you obviously expect that the movement or the momentum, right, would continue for the next couple of days, right? Because there is so much buying interest, so much bullishness in the stock, you expect that to move, you expect the price to go higher and higher over the next couple of sessions. Now, what would you do? Would you be a buyer or a seller of the stock? Given that today is a bullish user day, tomorrow, would you be a buyer or a seller?
The seller.
Buyer.
You obviously want to be in line with the trend, right? You don't want to go against the trend. Therefore, you would be a buyer on the stock, right? So therefore, you would be a buyer. So let's talk about bullish Marubozu. Let's assume this is how my chart looks. Okay, so there is a candle here, there is a candle here, there is a, all these are different days. And suddenly I spot a bullish Marubozu, right? These are all different candles. On the fourth day, I spot a bullish Marubozu. Now, because there is a bullish Marubozu here, I will expect the trend to continue. I will expect more buying in the subsequent days. Therefore, the next day, on this day, right? The next day, so this is on the fifth day. So this is day 1, day 2, day 3, day 4. On the fifth day, I will be a buyer. I will be a buyer and I will buy somewhere around the close of that stock. So I will watch for the market. If let's say this has closed at 50 rupees, right? So on fifth day, I will look to buy the stock at as close to as 50 rupees. And I will expect to hold on to this stock till my target is achieved, right? My target could be, let's say, 1%, 2%, or 3%, or whatever. Now, setting targets is a completely different aspect. Given the time that we have, I don't think so we can address that. But let's assume my target is, let's say, 3 rupees. So I will sell this at 53 rupees, right? I've bought the stock at 50 with an expectation of selling the stock at 53. But what if the stock price doesn't move as per my expectation? End of the day, candlestick is just a theory. It is giving you an odd, right? It's giving you odds of a certain odds that the stock price will go up. There is no guarantee here. We're expecting the stock price to go up, but in reality, it can come down also, right? So the low of the candle, let's say 47 here, right? So the stop loss for the stock would be the low of the candle, which is 47. Now, once you identify the buying price, once you identify the selling price or the target price, target or sell price, and you identify a stop loss price, you complete a trade setup. Now, any trade, these three things are extremely important. Before you buy the stock, you need to know at what price you would buy. Why are you buying? Why are you buying? At what price are you buying? What is the target price at which you're going to sell? And in case the trade doesn't work out in your favor, what is the price at which you will exit the trade? Right? Now, just based on Marubozu, just based on this one candle, I'm getting a complete trade. Right? I'm getting a buy price. I'm getting a stop loss price. Now, target is something that I've randomly assumed here for the sake of this conversation. But there are techniques to set targets. We'll probably talk about it some other time. But let's say you also have a target at 50, 53 or whatever, right? Then you complete your trade. And this is a complete trade setup. And this is the beauty of candlestick. Each pattern gives you a complete setup, right? Each pattern gives you a complete setup. Now let's so the next day, on the fifth day, you are looking to buy the stock at 50 with an expectation that it will hit 53. Now 53 can hit either the same day or over the subsequent days, right? And but once you take up the trade, the most important thing is that you will stay on this trade either till your target is hit, which is 53, which can happen either today, tomorrow, or day after, or your stop loss gets triggered, which again can happen either today itself, tomorrow, or day after. Either, so you're going to take an action either at 53 or at 47, right? So that's how you set up a trade with a bullish Marubozu. The same thing is applicable to a bearish Marubozu also. In a bearish Marubozu, let's say again day 1, day 2, day 3, and you spot a bearish Marubozu, right? So this is a bearish Marubozu. So you, let's say this opened at 63, closed at 57. Now, I don't know if you guys are familiar with shorting, but if you want to short a stock and carry on a short, then you would be selling the stock at 57. Let's say your target is 55. The high of the Marubozu, which is 63, becomes your stop loss. Now, again, this is a complete trade setup. Any questions with this? I would like to listen to you now. Any questions?
Excuse me, sir.
Yeah.
So what should we do if in case there is a gap up market?
Fair enough. So let's say let's go with this. Let's continue with this trade. Okay, I'm assuming buy trade is. So we've set up a buy trade here. So we bought at 50 on day 5. You're expecting the price to go to 53 either the same day or the next day or one of the subsequent days, right? Let's say on day 6 the stock opens at 54 or 55 or something like that. That means your target is already achieved. Therefore, you should be selling the stock. You have no business holding on to it. Or let's say instead the stock directly opens at 47, 45. Now, obviously, your stop loss has been triggered at 47. So you have no business to hold the stock. You book a loss, move out of the market, and look for other opportunities. So gaps is a very inherent concept in the stock market. So gaps will occur. You just have to know how to deal with it. If your stop loss or target is triggered with a gap, then you have to quickly take an action, unless you have a follow-up plan.
Sir, before buying, if there is a gap up, then what should be the price
Yes.
that we should
So
buy?
what you're looking at here is to buy in and around 50. Let's say then on day 5 the stock gaps up and opens at 57. Now, obviously, you missed a trade here because 7 rupees is a big variance compared to the price that you wanted to buy. Therefore, you will avoid this trade. Or maybe watch during the day. If the stock price dips to 50, in and around 50, then you can look at buying. Otherwise, you will avoid buying this. You look for other opportunities. Now, obviously, there are very lot of arbitrary things that I've mentioned here. I've used the word in and around 50. I've used if it comes back to 50 during the day, look at buying. So all those are very arbitrary things. Now you can fill all those gaps when you do something called as backtesting. Now, what does backtesting mean? Let's say let's actually open a chart, right? So let's. Can you guys tell me a stock? We can look at that chart. Let's say Infi. Now we have a. Can you look at this?
Yes.
Can you look at this chart? This particular stock that I'm pointing to.
Yes,
So
sir.
that's a Marubozu, right? That's a bullish Marubozu. Now, according to whatever I just explained, you should be a buyer on this day, right? So assume this was day 4. Day 5, you would be a buyer. Now, after you buy, what did I say? You either need to hold on to the stock till your target is hit, or you look at exiting the stock when the stop loss has been triggered. Now, what would be the stop loss for this stock? It would be the low of this candle at this price, right? So on day 6, you would have bought the stock, you would have held on to it. If your target is only so much, you would have exited. Or if you had a bigger target, you would hold on to the stock. But on day, this is 5, 6, 7, 8, your stop loss has been triggered. You should be getting out of the stock. You have no business holding on to this stock, right? Now, this is the best part about candlestick. It will tell you at what price to cut your loss and move ahead. Now so that's why people love candlesticks, right? So now this is an example of a setup where bullish Marubozu has not really worked. Now, and that's absolutely fine because, like I mentioned, these are all just uh, candlesticks. Just enhance your. It just gives you an odd, right? There are no guarantees here. I'm just trying to see if there is any Marubozu that has worked. Anyway, I was talking about backtesting. So what backtesting tells you is, let's say you take last 6 years of, let's say 3 years of data, end of day data of Infosys. You plot the chart and pick out Marubozos. How many bullish Marubozos were formed? Let's say out of 6 years, let's say you're backtesting 3 years of data. You're looking at basically 252. There are 252 trading days in a calendar year. Right, 252 into 3 years, that is the number of candlesticks that you will get, roughly about 800 or whatever, right? So out of the 800 candles, you need to identify, let's say you identified 75 bullish Marubozos, right? Out of the 75, 40 were successful. How much is 75 minus 40? 35. Huh? The rest were unsuccessful, right? So you will get a ratio. So you will know that, and if they were successful, at what price did you buy? What was the average target? And if they were unsuccessful, what was the stop loss? So if you can tabulate something like this, then you're essentially backtesting. So and this will give you a 40 by 75 will give you the success ratio. 35 by 75 will give you the failure ratio, right? Or 1 minus 40 by 75 will give you the failure ratio. So the next time, let's say this is on Reliance. So next time when there is a Marubozo that occurs on Reliance, you will immediately know what is the probability that this will work in your favor and what is the probability it may not work. And if it is, and if you're going to be a buyer of Reliance because of bullish Marubozo, then you will know roughly what should be your target based on average target that you would have estimated, right? Now this is for Reliance. This success ratio is applicable to Reliance. So you will have to do this for Reliance, Infi, TCS, Biocon, all the stocks that you're interested, right? Each stock will have a different ratio. Now, if you have a handbook which will tell you bullish Marubozo for Reliance, this is the success rate, this is the failure rate. For Infosys, this is the success rate, this is the failure rate. Now, if you can develop something like that, then you will know, then you will, before even taking the trade, you will know what is the confidence level at which you can take the trade. So this is backtesting. This is how you can fill all the gaps that I was talking about here, right? When I was discussing this trade setup, when I said in and around 50, that was very arbitrary. You can fill those gaps by actually backtesting. Any questions here? Any questions, guys?
So does this strategy work in intraday also? Like
Yeah.
if we identify like Marubozo gives higher trend in upcoming like time frames.
Yeah. So
So
that's the thing about candlesticks. Candlesticks is applicable to all time frames. It's applicable to any time series, right? Anything that has a time series. It could be your stocks, commodities, forex, or even crypto. Although I have no idea about crypto, but I've seen people apply candlesticks and trade crypto and all that stuff. So, but I have no personal experience doing that. Uh, but yeah, so technically speaking, anything that has a time series of open, high, low, close, you can form a candlestick out of it. and set up trades based on patterns. So any questions?
Excuse me, sir.
Yeah.
Sir, what happens if stock goes for market correction? Like the next day, it will be bullish or bearish?
See, correction technically is a term used to identify a downtrend. Yeah, if it depends on what trade you set up before the correction. If you set up a long trade, if you bought, then obviously you will be stopped out of the trade and you'll have to cut your losses. But if you've set up a trade in anticipation of a correction, which means you set up a short trade, then you ride on the profits. Right? Any
Okay,
other
sir.
any other questions?
Sir, recently I read about PE ratio, NSE trending in PE ratio. So exactly what is that?
Sorry, PE ratio, is it?
Yes, sir. Yes, sir. PE ratio.
So that's price to earning. Just a second, please. Oh, that's a completely different concept, right? So while we are talking about technical analysis, that concept is related to fundamental analysis, price to earning, right? Or also called the PE. So let's say you have, let's say you're a company, which means you have a income statement. So let's say your revenue is 100. So you as a company sell 100 rupees worth of goods, right? Now expense is 30, right? So 100 minus 30 is 70. So this is your operating profits, also called your EBITDA, right? This is also called EBITDA. Let's say on 70 you've taken a debt and you pay interest on that, right? Let's say you pay 5 rupee interest, so you're left with 65. Are you familiar with this income statement? So this is called profit before taxes. Now out of this you pay taxes. Let's say you pay 5 and you're left with 60. So this is your PAT, or the profit after tax. So 60 rupee is your earning for the year, right? So let's say your company has 6 shareholders. Okay, so number of or let's say you have number of shareholders is 6. So we calculate something called as earnings per share, or the EPS. In this case, earning is 60 rupees and there are 6 shareholders. So earnings per share is 10 rupees, right? Now the EPS is 10 rupees. Now let's say your company is trading in the stock market at 20 rupees, 20 rupees per script. So in this case, your price to earning is 20 divided by 10, which is 2. So for every 1 rupee of earning, your company is trading at a valuation of 2 rupees, or 2 times. So this is your price to earning. Now, based on this, you can figure out whether the stock price is high or low. If you feel this is a low PE, then you can be a buyer of the stock. If instead, let's say it was trading at 200, then this would have been 20x. This would be a high PE stock. So based on your perception of company's valuation, you can decide to either buy or sell the stock. So that's price to earning.
Thank you. Thank you.
Yes. Any other questions? I think I've already overshot the time.
Excuse me, sir.
Yeah.
Sir, usually, I mean, before we start investing, we are familiar with percentages which are less than 100. I mean, in our entire life, I would say.
Okay.
Before we start investing. So when we are investing and let's say I am getting more than 100% return on my investment. So there is a psychological controversy in my mind that how this has happened. I mean, there is something wrong. How could it be more than 100%? So, I mean, I sold the stocks, let's say, and I was lucky that was 5 months before, and the stock actually is in bearish state currently. But how to deal with that? How to deal with that thing? I mean,
sure, I'll try and help you. What's your name?
Sir Suraj.
All right, Suraj. Where are you from?
Odisha.
Odisha, Bhubaneswar. Is it?
No, sir.
No? Okay. So I'd been to Bhubaneswar once, long back, I think late in the no, early 2000s, right? Which is that main road in Bhubaneswar, Pratap Nagar? No, you have that long main road, which is very beautiful. I forget the name. Janpat? No, not. There is a circle. There is. Can you tell me what the name of that road is?
So there are more than one, sir. I don't
No,
know.
I know, but
Yes, it is Janpat. It is Janpat.
Janpat Road, right? So long back when I had come, there was, I'm talking about early 2000s, right? I had come there, and my recollection of Odisha was that it was in a very, very bad state. Early 2000s, I'm talking about. There was no proper infrastructure, there was no proper roads, and all that stuff. It reminded me of a place that would never improve. That's the impression I had. But I had again been to Orissa recently before COVID, and I was astonished with the kind of development the city has gone through, right? Especially this road that I was trying to recollect. And such beautiful wide roads, I felt ashamed thinking about the traffic in Bangalore and all the congestion here in my town compared to how peaceful and nice the roads are in Bhubaneswar, right? Now imagine in 2000, out of some dumb luck, I had come and bought a big commercial building, okay, in Janpat Road for, let's say, 10 crores. 10 crores in 2000. Now, after 22 years, right? After 22 years, the same building in Janpat Road, how much do you think this will be? And the city has gone through enormous transformation. Janpat Road is like one of the hotspots. I'll assume at least 30 crores.
Yes, sir, it will be more than 70.
It will be more, but let's assume for the sake of this simple example, it will be at least so much. What is the absolute return that you've made here? Do you agree?
Yes.
300%. It's the same thing with the stocks. Right? So stock prices are no different. So percentages can go beyond 100. There is no upper, or while 0 is the lower limit. Um, uh, I mean, actually, no, it can go negative also. So there is no upper and lower bound. Minus you lose your entire capital. That's the worst that can happen. Or upper limit based on the stock, the company that you invested, there is no upper limit. In fact, a lot of astute investors, they don't even look at stocks if they're not going to get at least 500x. So that means they would expect the stock price to go 5 times at least on the least, right? So there are people like that. Did that answer your question, Suraj?
So not quite. I mean, what I wanted to ask that, I mean, you are a financial person. Your background is in financial stuff. So I mean, you knew the value maybe, or in the first sentence also you said that by luck, you kept that thing. But when it is happening to me for the first time, I have never experienced more than 100% in any field.
Yeah.
So either my analysis, my research is not of that confidence level that I'm thinking that 100%, how could it happen 100%? So I sold.
Your question. So how is it even possible that it's happening? Is that your question?
Yes, sir. When in the first time we are getting a lot of, I mean, hikes in our return, how to deal with that psychological controversy that is going on.
Yeah, so I think, okay, I understood. Is your conflict in mind, are you trying to figure out whether what you've done is through luck or skill? Is that what you're trying to understand?
Yes, sir.
Okay, then that's a very easy way to analyze. If it has happened for the first time, don't overthink it is because you're lucky. Okay. Now, if it happens once again, maybe you're still lucky. But if you keep on doing this over and over again, if you're able to repeat your actions and consistently make stellar profits, that means along with luck, you're also honing your skills in investment. So end of the day, you need to see if it is repeatable. You should be able to repeat, you should be able to measure it. If not, blindly attribute it to luck. If you're consistently doing it, then give yourself a pat on your back saying that you actually have the necessary skill along with luck.
So then I have to try it for some more time.
Yeah, obviously you need to try and you need to make sure that it's a repeatable process. It's not a one-off affair.
Yes, sir. Thanks. Yeah.
Any other question? All right, guys. So I think I've overshot the time. I have another meeting at 6:30. So, but I can probably take one or two more questions if you have. Otherwise, let's conclude.
Yes, sir. We can surely do that.
Yeah. So what we do is see. I've got this technical analysis list of all these. So think about this as a book, right? In Varsity, think about this as a book. So this is the technical analysis book that you're referring to. There are several chapters, right? All these are chapters. If you go from chapter 1 to 22, then I can guarantee you that you will be fairly conversant and confident about dealing with the stock markets from a technical analysis perspective. Now, just because I'm ending this session, it doesn't mean I'm not accessible to you. Let's say you're reading this chapter and, luckily it's about Marubozu, right? So let's say you have queries. So go ahead and post your queries. There are tons and tons of queries in each chapter, right? And I'll get back to you with my response within 12 or 24 hours. I've been doing this for years and it's a part of my daily ritual. So post your queries and I'll get back to you with the response as soon as I can, right? So please go through this module. Now, like I said, technical analysis, we also have videos, right? So we also have videos here. You can go through either the text or the video format, or we also have a mobile app which you can download. It's available both on Play Store and Apple Store. So download the app and please start using it. You've got the same content there. And if you've got any queries, please do ask your queries here, and I'll be happy to answer that for you. Not just technical analysis, but any topic that we have here, right? We have from basics all the way up to right now I'm talking about financial modeling, which is a slightly advanced topic. But in between, whatever you want, you already have it here. So please make use of this resource. It's absolutely free. You don't even have to log in here. You click a topic and start reading. That's it, right? We don't even want to know your email ID, IP address, none of that jazz. Everything is available for free. It's for you to utilize, right?
Yeah, right, sir. Definitely, we can get a benefited from that. And do we have any more questions? We'll just wait for 1 minute if there are any further questions.
Yeah. So if you have any queries, post it on the website, or I'm also available on all the social media platforms also, Twitter, Instagram, everything. Although I don't generally check messages on Instagram, but I keep putting stuff. So wherever you want, you can ask your query. I have no issues.
Okay, then I guess we can conclude this session here, sir. So once
Sure.
again, thanks a lot for this informative session, and definitely this will encourage us to start our journey if we haven't started yet in this direction of stock markets and investing. So
Sure.
thanks a lot for that, and also thanks to the entire audience who has stayed till the end. And in your groups, we'll be sharing feedback forms. So if you have any feedback for us, or if you have anything to ask or any suggestions, we would be happy to know that. And the forms will be anonymous, so feel free to pitch in whatever you wish to. And I'll just request before you can leave, sir, that we can take a screenshot. So
Sure.
I guess all of us can turn on our cameras if it's technically feasible. And some of us, please take some screenshots. That's the best we can do in online mode. Kshitij, is it done for the screenshots now?
Yes, I guess it is done.
Okay. Okay, sir. Thanks a lot.
Thank you, sir.
Thank you, everyone, for
Thank you,
joining
sir.
us.
Thank you, sir.
And we'll be back. We'll be back with more such sessions and some competitions too, because we are not just for webinars. So you'll have virtual trading competitions as well. So you'll get details about that through our Insta pages, and also you can follow our Insta page, FEBS.ITBPS, and we'll be also mailing you. So till then, bye-bye. Have a nice weekend. Thank you, sir.
Bye, everyone. Tushar.
Yes, Kshitij.
I have sent something to you.
Kshitij,
Please
wait,
send
wait,
it.
wait.
Please